All right, good morning, everybody. It is Cowboy, and we have Think Free on with us today. And we're going to go ahead and have another one of our sessions where we chip away at working on Think Free's algo. We're going to see if we can define it, get some data out of it, refine it, and perhaps even squeeze a little bit more profit out of it. But it does appear that the algo is going pretty nicely. So Think Free, you are at a point where how many back tests have you done? I know I've got the
Um,
Excel spreadsheet, but how many are
yeah.
you done?
Really, probably a total of around 90, 96 back tests. Um, I redid a set of them. Like I started out around September 4th, 2023 on the back testing, and um, and then lost my data after a while. Like I accidentally removed all my previous drawings. And then I just did it over again in a more refined way. Like it's interesting learning the process of backtesting, right? You slowly learn how to do it, to put all the numbers in the correct rows, and there's a certain number of transcription errors occurred. I think they were less of those later. Um, just trying to be more precise in my work. So after about 30 back tests, I lost all that previous data, except I recorded it on my Excel sheet. And then I went back to September 4th, 2023 on the Euro USD and did a further, I think about 60 or so back tests.
Okay,
Um,
let's go ahead and take a peek at the actual data. We'll take a look at the back test so people can see how and this is a good spreadsheet. Having done several, I can tell you this looks a lot like spreadsheets I would do, but I want to just try to give me one moment here to make it a little bit more legible, make the screen more easy to read for the audience. Okay, I'm going to share that now. So here's the screen.
right.
This is just back testing data, and we don't have to go into the details, think free.
Mhm.
So don't worry about explaining all of this, but this
Yeah.
is not that complex as spreadsheets go. Okay, so we have a date, we have a time, long or short. I can tell you have some Excel experience on here. We have risk to reward, which you're setting at 2, just for your purposes of calculation in this case. And that's one of the questions, one of the things we were talking about early, but right before the show, was whether or not we want to see if we can refine your the best risk to reward to assign to your trades. Now, um, the easiest way to do that would be to have some form of automatic back testing to do the math for you, right?
Mm.
However, TradingViews is not quite there. TradingView's backtesting mechanism, there are some issues with proper execution on that. So
Mhm.
we don't know that we can really, trust those kind of numbers, and that's
Mhm.
that's the limitations we're working with. Now, there are some options for those of you who are working with different programs. There are those who might be working with, say, um, like MQL5, trading over on MetaTrader. And the problem with that one so far is that the only way you can really backtest is by coding the algo first. You can't just
Mm.
combine, your data and do it that way. You actually have to have the whole thing coded, and then you
Mm.
can backtest it. Until then, you're merely backtesting individual indicators, and so there are shortcomings over there too.
Mm.
I Interestingly enough, I was approached by an individual who codes in Python. So we might have some avenues opening up on the coding side of things as well. He actually teaches people how to. So that's always good to have
All
in your
right.
back pocket. But in the meantime, I do like, here's the thing about it: doing this manually, it takes a little bit longer. But what you also do is you refine your data as a function of going through it manually,
Yeah.
right? It's like it's really getting to know the data.
Hmm.
And as tedious as it might be, you can put something profitable together and deploy it, and then go back and and refine it.
Hmm.
So
Hmm.
it's not like you have to get it perfect the first time. You just have to get it profitable the first time, and you can go ahead and make money and go refine it. And in my opinion, it makes people better at creating these algos.
I can
Um,
see why.
yeah, you're
I'm learning tons,
feeling it, Jay.
learning a lot just by doing it, and just it's quite interesting just to study the charts with your own preconceptions and just study it and look at it, and you learn things.
Yeah, it's like I always say it kind of speaks to you.
Yeah, yeah, yeah. I've been
Yeah,
finding that.
as you're kind of feeling it out, you start to realize, I don't know, you get a feel for it.
Hmm.
And if you're somebody like me who, I don't know, maybe I'm a little bit on the spectrum or something, but I just like
Hmm.
staring at these charts all day long.
Yeah,
And I geek out, and it's probably why I'm good at what I do.
yeah.
Uh, so it's I don't know that it's enjoyable for a lot of people,
Hmm.
but it certainly is something to do. So let's have a reminder. I think I remember we were working on a methodology of just a triple EMA with the proper time frames. Did you
Plus,
end up using the SMI and the ADX on the
no,
far
I
left?
just no, I just recorded. I did not. I just used the ADX. I just recorded the ADX level and whether SMI was orange over blue or blue over orange,
And then perhaps you can use that data in the future.
or perhaps that was the idea.
I can see how you think like I do, because
Ah,
in this case, I do this a lot. You'll notice whenever I do my shows, I have that screen with all the crazy data on it, the
yeah.
multi-panel screen. Well, I don't use all of that data, but that
Hmm.
data is there so that as time goes on, I have the opportunity to, oh well, I might see some opportunities in the data,
Hmm.
right? So
Hmm.
and if you're recording it, it goes on the spreadsheet, and you can actually sort for that data. You can sort for, oh, well, I had this level of success when the ADX was here, or I had this
Hmm.
level of success when the SMI had done this. And so,
Yeah.
that's
Yeah.
a good way in data science is to record data that you think might have an effect, but you're not sure if
Hmm.
it does. It may not be a part of the formula now, but you can do, and it doesn't take much to record that little bit of data on the bottom left.
Yeah.
So that's great. So you wanted to come on today, and you
Yeah.
wanted to discuss everything. And I like to say, or like you said, you had you're about 100 back tests in,
Hmm.
and about 60 of those are refined. So you're
Yeah.
going back and redoing them. So did you have some? Before we get too far, did you have any
Hmm.
questions?
Yeah. Well, yeah, I want to refine. Well, one question is, I think it's partly the question would be how to use the market structure and candle theory to make better trades. I'm strictly using the triple EMA and the multi-time frame data to enter trades and putting them all in at 2 to 1. Um, and I think there's a way to get more profit somehow with that, with the understanding market structure better, and maybe upping my risk to reward ratio somehow. I don't even know if it's possible with this algo. Um, I know I need to learn way more about market structure and candle theory and things like that, though. Um,
Sure.
and then the setting my stops. I mean, I've just been eyeballing it, below or above recent structure. Um, there may be a way to refine the stops. I don't know, but my trades start at September 4th, 2023. I don't know if it'd be worth looking at some of them just to see what's going on. But
Well, we can, but before we get too far, V the Gorilla has entered the chat. V, how you doing, sir?
Hey, good morning, gentlemen. How are you guys doing?
We're doing great. Think Free is with us, and
Hey.
he actually came on. When was it? Think Free about 2 or 3 months ago.
I
Two
think about
months.
I think about maybe 3 4 weeks ago. But yeah,
I
just
remember.
maybe
So
a
it was
month
pretty
ago.
recent.
Yeah.
It was, and it was actually kind of a hit. A lot of people really watched this show after the fact,
Oh, good.
and which is, most of your live shows don't really get a whole lot of, at least on my channel, you don't get
Yeah.
as many views afterwards. But this one was very popular. So
Sweet.
yeah, it sounds about right. Like 4 weeks ago it was.
Yeah.
And that said, so we want to address a few issues here today, right? We want to take a look at possibly squeezing a little more juice, right?
Hmm.
We want to see if we can get a little bit more profit by taking into account structure or candle theory.
Hmm.
I can say that structure is a bit easier to learn, but there are some shortcuts with candle theory.
Okay.
Okay, so so therefore you can in a sense you can automate the candle theory if you're trading manually. Now I guarantee
Mm,
you with both structure and candle theory, a higher level programmer could even program that in,
mm,
because those things are now available. I mean, I could even help to devise such a thing.
mm,
However, I do prefer to keep it simple if I'm going to auto trade. If I'm going to simply let the computer trade, I like
mm.
to keep the algo lightweight.
Right.
But if it's just as easy to code in these things, then I say why not, right? So let's go ahead. Oh yeah, and then the other thing that you and I had briefly spoken of early on was the risk to reward and how we might
Yeah.
be able to get a little bit more out of that. So,
Yeah.
and very astutely, you brought up the difference between the average and as far as the mean and the
Mm.
median,
Yeah.
like
That's what I
that.
was
So
with
yeah,
the
and
yep. On
no, go ahead.
the far right column is what the risk to reward could have been. Like so on some of the losses, I could have said a 1-to-1 or a 1.5-to-1. On numerous wins, I could have, sometimes set it at 4-to-1 or um,
I'm going to highlight this on the screen. I had to bring back up the spreadsheet because I had taken it off
yeah.
there. But this far right column is the risk to reward ideal. So what
Mm,
Thinkfree did was he took a trade and he got I call it like the max RRR, right?
yeah.
And so that's basically what it is how well this trade would have done if you magically knew
Yeah.
how far it could have gone, right? Like, and
Yeah.
that's just, you want to maximize that. And of course, it seems to me as I scroll through your data that for the more refined tests,
Mhm.
you do
Yeah.
have a little bit more on average realistic risk to reward.
Yep.
Not those, you're always going to have those bangers that hit like 5 and 4. But
Yep.
when it comes to the data, a simple way, although it might not be the most accurate, is to just do a summation and
Mhm.
get the mean.
Yep.
So, and this is how, and you've probably, I'm going to say
No,
something for the audience. Think free. I know you know how to do this,
no,
but you would go ahead, or I assume you know
no, I
how.
don't. No, I don't. I'm just
Oh
learning.
wow.
I'm just learning
Okay.
Excel as well.
Well, the way you've set up, I'm going to say something. Think free seems to really have the temerity to grab hold and learn things, because the way you've set up this spreadsheet looks like you know what you're doing. And I've
Yeah.
been working with spreadsheets for 20 years. So let me go ahead and scroll down here. I'm going to highlight this P column. Okay. It might be hard to see on the screen, but
Mhm.
this column that just, I'm going to only highlight the actual numbers, that I'm going to do a summation, right?
Mhm.
So I'm going to go to the bottom of that. And the easy way to do it is to go to here. And again, the screen's a little small, but if you go, and you could always Google how to do a sum
Okay.
on Excel. That's how you do it. But I go to File. Oops, that is not the right thing. Go to Home, and you'll see Auto Sum. It's on the top right here. If you look to the top right of the screen next to that QR code, if I click on that E, that sigma, I
Mhm.
click on that, and you get at the very bottom of all these ones I highlighted, it's
Okay.
192.1254, right? And then you have to divide that by the amount of cells.
Mhm.
And the tricky thing is that you have some NAs in here.
Yeah.
Okay. So what we do is I'm going to go ahead and undo the sum, and I'm going to let's just undo what I just did, and let's see. All right, so I'm going to do just a little Excel stuff here, and I'm not going to make this an Excel tutorial. I'm actually going to change this a little bit. I'm going to highlight this. And again, this isn't going to change your spreadsheet. I'm just working with a copy.
Yeah.
I'm going to sort. so that I get out the non-applicables. The NAs are when you don't have a win, right? And those don't count in the numbers.
Initially, yeah. And then I stopped
Those
doing that.
NAs, they don't count in the numbers. So what I would do is you could make those, yeah. So I'm going to do a sort, and it's not allowing me to do that. Interesting. Sort. Why? Oh, there's something you've done here that doesn't allow me to sort. Let's see. Hold on a minute. I'll highlight it as I did before instead of just highlighting the whole column. There's something, it's for some reason, it's not allowing me to sort, and I don't know what you've done.
Yeah, I don't either.
This is really a little odd, actually.
Maybe,
But what I can do is I'm going to do this.
could you do the sum of
We're going to copy. We're going to open up a new page on the bottom here, a new sheet without all the rules that you had on the old sheet. And then I'm going to sum over, I'm going to sort over here. So this is the sheet 2 on the bottom is going to be a data mixer sheet. And I tend to do that. I tend not to mess with the original sheet. I don't change that. I shouldn't. And I'll create a new sheet where I'll take the data over here and I call it my data mixer sheet. Highlight the column, sort smallest to largest. And then you'll notice all the NAs are on the bottom. See
good.
here?
Perfect.
And then I take the best way to do it actually is to take the NAs out, just delete them. Delete. And then I will go ahead and highlight this, all the numericals, and we'll do a quick auto sum. And you will get the answer. What? That didn't work out. Let's undo. Oh, it's because it is probably in some format that doesn't work. Yeah, this helps to know a little bit of the spread of Excel. You don't have to know a lot. Number is just going to be a number. Okay, I think we had that's why. All right, so we're going to go ahead and do a sum. If you're an Algo Factory, you're having trouble with Excel, let me know. I'll walk you through it. But 192.13, I think that was the number we got last time anyway. And we have 81 entries, right? So if you look at the columns, you get 81 entries, 81 trades that resulted in a risk to reward. So we divide 192.13 by 81. So equals, you can do this in a calculator, but I'm going to do equals 192.13 divided by 81. And the answer is 2.37. So your mean is going to be 2.37 risk to reward. So, and that's just your mean. Now there are, there is the risk to reward. There's the, not the risk. There is the mean, the mode, the median. Like there's different numbers in this game of averages and statistics. And that's actually, my degree is extremely heavily in statistics. I actually have an econ degree that focused on what's called econometrics with calculus-based statistics and all that stuff. And all that crap is gone because it was like, a long time ago. I don't want to betray my age here, but I will say that you're a little bit better than a 2-to-1 on just the pure mean. Okay.
Right.
So how can we squeeze a little more profit out of this? Right. There are a lot of ways to do this. And in the end, it's just going to be manual testing. If you ask me, unless you have a high level coder, and that's another story. So let's flip back over to the charts and let's do a couple of examples of how I might squeeze a little money out of this. So where's my button? Let's stop screen. V, what do you think so far of all this numbers and gobbledygook? I know I know you're good at this kind of thing, but it seems like, I don't know if this is quite as exciting to you.
Well, it's not about the excitement, right? I think one of the things that people need to take away from something like this is that understand that this is a process. And if people fall in love with the process rather than just the end result, you will be a much more proficient trader. You'll be well-rounded. You'll have the mental fortitude in order to do this because it takes patience and it takes effort. And I think, Free, you're doing a great job with this.
Yeah.
Really
Thank
impressive.
you.
Yeah.
Thank you. Yeah, I totally agree. Once you shift your mindset into process, it becomes much more enjoyable.
Yep, absolutely.
Yeah, that's so well put, V. Fall in love with the process. And somebody such as myself, who, like I said, I kind of geek out on the screens. I can sit there and focus on something really hard for a long time, which is just what it is. I just love the process. So it helps. I guess I am in the right job. I took a nice short on this very trade that you see on the screen right now last night, and I caught it It was so late. It was the middle of the, I trade the European session,
Mhm.
and I didn't share the trade on anywhere, which I could have, but I caught this thing right about here. So if
Oh,
I were
really?
to expand the screen,
Mm.
and I'll show you the trade I took last night. I got out this morning before the show because we have data coming out, but I did beautifully.
Mm.
I did have to exit. Actually, not ideal. It was right about here, so I'll, like a 3-1,
Mm.
and my stop was a little higher than that. But yeah, it was better than the 2-1. It was a
Mhm.
beautiful trade that I caught, and I caught it right on the second bounce last night. And again, it was a little risky, but that's just talking charts, taking a break from all of the gobbledygook, which we're going to jump right back into right
Mhm.
now. So let's see here. Okay,
Quiet.
so there's what's
Sorry, I
that, V?
apologize. I was yelling at my
You
dogs.
talking? tell
Sorry about
tell
that.
Maximus he needs to be
He's
like he
fine.
needs to learn Excel.
He's chill. He's fine. It's the little ones that are a pain in the ass.
Oh, little yippy dogs.
Yeah, they bark at everything.
You got a Yorkie, don't you?
Yeah, I got a Yorkie and I got a Pom.
Nah, yeah, those are. Oh, they're almost like cousin dogs. Those two. Let's see, Pomeranians.
Yep.
So they're like lap dogs for
Yeah, they're
that's
great.
that works, dude. You got like 3 Lamborghinis. I mean, a lap dog kind of fits. Um, all right, so let's do. I'm just joking. V drives. What do you
Hot
drive?
Wheels.
V like a V? You drive tacos?
I drive a taco truck.
Talk. Oh, talk. Now
I sell tacos.
you're talking my dude. I love Tacomas, man. That's what I
Tacomas
drive
are
a Tacoma.
awesome.
Fucking
I'm a big fan
bulletproof.
of Tacomas and Foreigners. Those things are bulletproof. You can't kill those things.
Mm.
Mm-mm. Nope.
Overseas, the Hiluxes are amazing too. If you're overseas, you're in Europe, Australia, those Toyota Hiluxes are just bulletproof. You can't kill those
Mm.
things.
Yeah, my dad, he had a Highlander from like the early 2000s, and some guy like just knocked on his door, said, "Can I buy this from you?" And he said, "Buy it? How much?" And he gave him this really nice price. My dad said, "Why are you buying this for this price?" He goes, "Because I can take it to the Philippines and sell it for way more."
Yep.
Oh.
That's how good they are.
Mm.
Structure is look. There are entire classes in structure that I teach
Yeah.
over on Algo Factory. I'm sure you could
Yeah.
go back and review those. So the thing to understand about structure is you want to look at the trend,
Yeah.
and in this case, you have movements up, you have impulses, and you have retracements. So the hard move is going to be an impulse. The lesser move will be a retracement. This is a massive impulse, so you're going to get a retracement, right? Now, by the way, there will be a time when the impulses and retracements start to blend into each other, and then you just get a range. So it's
Mhm.
not always going to be
Right.
impulse and retracement, but this right here is a very clear. I'll show you right now. This big move down is a big impulse, high time frame, and
Mhm.
that's a retracement. So you notice like the big impulse has long candles, retracement is just kind of taking a breath, right? You can almost look at
Mhm.
it as like working out in the gym. You get the big push, and then you have where it comes back down and it's more slow, taking a breath.
Mhm.
So in this case, in the current trade, like the trade I took last night, I could see
Mhm.
the price was in an uptrend. And uncharacteristically, I don't know what happened in the news. Maybe V could tell us about it. But if you'll notice in the market open, you see that massive gap up?
Oh, yeah.
That doesn't that's very uncommon in Forex. For price to gap up like that is extremely uncommon. It's not, I mean,
Mm.
it happens, but it's just not very common. So there must have been something notable that happened either in the US currency or the euro currency. And one way to tell is to flip over to USD CAD just to see if that gap exists here as well.
Mm.
And not so much. So it must
Mhm.
have been the euro. So we look at, say, EUR GBP or the JPY either way. See, the gap was in the euro.
Oh,
So
wow.
something happened with the euro, and whatever it was made the euro much stronger than when it closed on Friday. So
Mm.
something to bear in mind. Something's happened with the euro forex markets, and that's how you analyze which one to look at. And in this case, though, the dollar didn't gap; it was the euro that gapped. So whatever happened, the euro opened much stronger than was planned. And I will tell you that I was kind of going back and forth with Expound the Profound on Twitter, and we were talking about so basically Israel is now selling U.S. debt. Just a little bit of news,
Mm.
and
Well,
they're
that's what
selling it in massive.
great allies do. Great
Yeah, they
allies love
just sell
to.
your.
Yeah, yeah. Absolutely.
I wonder, did they not get their way and now they're throwing a tantrum? Is that what's going on? I mean,
Exactly what it is, man.
do you know what it is? Like why they're not so happy?
Oh well, we're not giving them the. Well, you got to understand that the Pentagon canceled the arms deal. You know,
Oh, we canceled
so
it again.
yeah, we're only giving them lip service, and we're not really supporting them the way that they want to be supported. So that's the situation.
Well, like a good lapdog, speaking of lapdogs, the ECB went ahead and bought that debt up.
That's right.
So
Because that's what
all the debt that
Mm.
Israel is selling, all the U.S. debt that Israel is selling in retaliation for us maybe not selling them arms, or us maybe not supporting them going into. My guess is we don't want to support them going into where are they trying to go? Lebanon.
Rafa. Yeah,
Is it
Lebanon.
Rafa?
Yeah, I'm sorry,
It's probably
Lebanon.
both.
No, it's Lebanon. It's
Yeah,
Mhm.
yeah.
that was my guess, is that we were not going to support them going. And I think the comment was made to officialdom, we cannot support, or no, we can't stop them, is what kind of was the comment that was made, which indicates that we would want to stop them.
Mhm.
So, anyway, that's what's going on. Probably the push up in the European currency might be some way, somehow, that
Mm.
the debt was all manipulated to make the euro a little bit stronger. And that is
Mhm.
something that the Europeans need right now. So, all of that to say, though, it came out in the charts as a very tradable event. And
Mm.
the reason it did was going back to our discussion about how to use structure to squeeze more money out of your algorithm, right? So, structure is, in this case, you're going to want to look at a higher time frame, but just a quick demonstration of structure. When you're in an uptrend, the high point, right, you're going to look for price to possibly bounce off that high point or anywhere in an area that one of my mentors calls a kill zone. Now, there are different kinds of kill zones in trading, so be careful with the terminology. That's actually, kill zones are also like an area in the market where it kind of calms down and the big money messes with stuff. But that's not the kill zone we're talking about. We are talking about the kill zone in an uptrend where price was going up, goes back down, flips to going back up. So this kill zone in here is where, on the way down, price is going to want to head down and then bounce back up. So if we were doing a counter trend trade, and with your algo, it's possible to do, but your algo is
Mm.
more of a trend trading algo, so this
Yeah.
may not apply. Um, it might be more useful in a trend, but just to talk about structure, if we were trading against this uptrend, if we're just going to try to take a little bit of a bite out of this and go short, like I did last night, I
Mhm.
did a counter trend trade because I'm not, I'm one of the, I do not recommend this, but I am trend agnostic. I take the trade
Mhm.
that the algo says to take. I'm one of the few who can do it without losing their mind. But in reality, you probably want to be either a trend or counter trend. Okay,
Mhm.
just a little bit of not advice for you. In this case, though, taking a bite out of this, you're going to know the price is going to turn around somewhere in this box because it went
Mhm.
up, rejected, made its way back up, broke this high. So as price heads down, I actually had my target, my original target, above this area based on this right here. Okay, it's old school
Mm.
price action trading. So that's how structure can
Mm.
matter. And
Yep.
we talk about structure in Algo Factory. We use many different tools to discuss structure, but I'll take a break because I think for you, you sound like you had a question or something to say.
Well, no, I'm just thinking that as I was doing the algo comparing the 4 hour, the 1 hour, and the 15 minute, that yeah, I'm aware of some of this stuff and I'm studying the structure. But at times, I think I need to take more times per test trade to really spend time looking at the structure more, and that would help because sometimes it becomes hard to tell if you're with the trend or not. Like you can at times it's simple and you just sort of follow the trend, and then it becomes much more vague. And then I don't know if I'm trading with the trend on some of the trades. And I think that's where I had more losses.
Well, by nature of your algo, because I remember you designed it while I was kind of watching. At least the
Yeah,
most recent iteration, you and I kind of worked on it together on the last show about a month ago.
yeah,
So you are by default trading with the trend.
yeah, yeah,
You can't not trade with the trend on this
yeah.
because you're using your high time frame.
Right.
You're basically triple EMAing, or use EMA or
Mhm.
SMA.
Yeah, I'm
Use it.
using EMA, but yeah,
EMA, not
yeah,
simple. You're using exponential.
yes.
So, which I think in a way, the only way to know if that's better is I've tested
Yeah.
simple EMA versus exponential EMA, or simple moving average versus exponential, and
Mhm.
sometimes it tests better, sometimes it doesn't. It's actually
Uh-huh.
a phenomenon. But the point here is that the far right side of this chart is a 4-hour chart.
Mhm.
And V, by the way, we're just going to keep this this particular session on the public
Yeah,
look
that's
here.
fine.
Let everybody see this because it's on these sessions. Unless, by the way, think free. Unless you would rather not think free. This
No,
is
no.
your algo. If you're good with that, okay.
Oh, no, I'm
So
good
I
with
don't.
it. Yeah, yeah.
Okay, that's the
I'm
thing.
I'm
That is
I'm
kind of
here
up to
I'm
you
here
on
to
that.
learn.
Wonderful.
Yeah.
So with this, I remember the way this works is that when you have, and correct me if I'm wrong, think free, but
Mhm.
when your, let's go to the far right side, your trend, right? This is a
Mhm.
4-hour. This is high time frame stuff.
Mhm.
And when the shorter average, which in this case is, are you using a ribbon? Okay, so let me get on here. Let me
Yeah.
get into the settings real quick. Inputs. Okay, 10, 20, 50. Okay, so when the 10, the yellow, when that crosses above both the 20 and the 50, that means for your algo, this is an uptrend. Is that correct?
Yes. That
Okay, and
yeah,
that's
I'm using mainly the 10 and the 20 as markers, but the 50 helps identify trends as well
so.
overall.
Do
I
you
might-
have? I'm sorry. Go ahead.
Yeah, mainly trading with the 10 and 20 on knowing when it flips, right? To an uptrend flips to a down, or the prices flipping up and down.
So if I were to blind the 50, could you still trade this algo?
Yeah. Yeah.
Okay, let's do that. Okay. So when the 10 goes above the 20, you're in an uptrend.
Hmm.
So let's mark our crosses here. And when the 10 goes below, you're in a downtrend. Right?
Yep. Yep.
So let's mark a couple of these here. And I'm going to identify, let's go from here to here. And this is the downtrend era. There's always that part at the end where you might catch a bad trade, and that's just how it works.
Hmm.
It's okay, as long as
Yep.
most of the trades work out well.
Yeah.
I'm gonna mark this red for downtrend, and we'll go in the past, and let's go ahead and do the next step. So the middle, excuse me, middle time frame, the hourly. Give me a second here.
All right.
Sorry, I had to get rid of a little lemon issue. Gross. All right, so I'm gonna also check. Okay, good. So this area on the 4-hour time frame where I've marked red, since all of these drawings transcribe to these other time frames, we know that this is also an area on the hourly where we look for downtrends.
Hmm.
And if I'm not mistaken, you're using the same formula with the 10 below the 20 for down and
Hmm.
the 10 above for uptrend.
Yeah.
So in this case, what I can do is I can refine this data
Hmm.
to where we know this is a downtrend up to here.
Right. Right.
And we can move this one. Okay, I have to be tricky with this. There we go. And we know that there's a short time when you are in a downtrend right here.
Right.
So now we can use this data refined from the prior screen here. Let's delete all this other unnecessary. And we could go to the trading time frame.
Hmm.
And as we don't need our SMI or ADX, I'm going to go ahead and obscure those.
Yeah.
So now we will further refine the same way. I'm going to blind the 50. We're going to only rely on the 10 and the 20, which I like. The more simple, the better. Easier to code, easier to deal with.
Yeah.
Less data to foul things up. So your first is going to be here. As soon as it hits, it's already in, but you're probably, I'm assuming, waiting for them all to line up at the same time. So the next time that happens is going to be here.
Hmm. Yeah.
And so you're essentially your trade Well, actually, we'll do the trade itself. Okay. So let me do this. I'm going to make this a little bit more opaque here. So that's good. And let's grab ourselves a short box. I call it a short box. It's not what it's called.
Yeah.
Short position, they call it here. But, I like my terminology here. So our first short occurs. Let me zoom in. And let me lock this here so we don't move it around. So that big red identifier, I'm telling the audience here, that date range, I right-clicked on it and I hit lock, because if I don't do that, I'll be moving it around as I manipulate the chart, right?
Okay.
A lot of little tricks of TradingView, and I teach all that stuff. Mostly people are learning it by osmosis. So your formula is for the crossover again of the. Let me do this real quick to make it more identifiable. And this is on the 15. Beautiful. Very tradable. I like this so far. We wait till the candle after the cross, which is here. And let's make our short position look like everybody else's. Okay, so the way that we can, there's a couple way to do stop losses, and there are classes in Algo Factory on how to do stop loss. So I might consider reviewing those. I don't want to give that away because I have a couple of different methods in there. But once you review those, and if you have questions, let me know. And there are some other methodologies that I don't talk about in there, but because you're kind of working with us and stuff, then we can maybe do a private show about that with everybody on Algo Factory to see. But one way to do it, though, and a very common way, is to have it one ATR above this structure.
Right.
So, and when I say this structure, I mean the most recent notable high, right? The most recent major structural change. And so that's going to look like this big move up and then down like this. Right. Now we don't know it's going to go this far down. We're entering the trade right here. So as of now, now as if we were quote unquote now, let's do this, make it more visible. Okay. So this is a big change, right? And as a matter of fact, I'm not going to get too deep into candle theory here, but this is a double top. So that's a very strong bit of structure, right? Price, you can see here, tries to get above that. It barely pierces it. So you can add average true range. And this is one that's super, super common. So I'm not giving away a whole lot here. But we go to average true range. And there's a couple ways to do it. You can use ATR channels, which is the easiest way to go. But if I were just to go to average true range, I could show you how and show the audience how this is actually done. This red line on the bottom is the average true range. And it just gives the average rotation of price. It just kind of gives you the maximum of the average movement. And so what I would do is I would, at the time of entry, now you can change. There's different ways to do this, but at the time of entry, right here, the average true range on this is going to be at about 2.5 pips. So remember, this is Forex, right? If you're trading in, say, cryptocurrency, it might say like $38, right? It would be usually it's a specific dollar amount for anything besides, for most things besides Forex. Forex is done a little bit differently. That's neither here nor there. At this point, it's not that important. So it's about 2.5 pips, and I would add the spread to that, like we talked about.
That isn't visible on the back testing.
You have to look at average spread. I would just, the euro is almost always 1.5, so I tend to err on the side of caution, and I add 2. The only time it's not. I'm sorry.
Yeah. Okay. No. Yeah. I couldn't see it on the back testing. That's all.
I don't know that it's you're using the review tool.
The replay. Yep.
The replay tool. Yeah, it may not be available, but the average spread, you can always Google like what's the average spread on the euro. But you have to be careful. Here's one thing about back testing that this is a really, really good tidbit out there. Just a nickel's worth of free advice. You have to. I wouldn't trade around the market close, because I wouldn't normally trade around the market close. And when I'm back testing, I don't back test for times when I'm not trading. I don't trade the Asian session.
Yeah.
Right. I don't trade it. And price is going to behave slightly different at all times. And it's going to have some similarities between the New York session versus the European session over time. So I would only backtest during the sessions I actually trade. And one time I never trade is going to be close to market close, which is after the New York close. I don't mess around. And the reason is that a lot of money gets moved around and your spreads blow out.
Okay.
And just like right after the close, your euro spread, I've seen it go close to 10 pips. And if that happens, you get knocked out of your trade. So unless I'm really far ahead in a trade, like I'm very deep in a profit, I'm out of the trade by the New York close. And I certainly don't enter any trades around that time. But in this case, it's after the close. It's actually at what is this? It's like an hour or two after the close. It's okay to enter at that time. There's not a lot of volatility, but it's doable. So if you are trading at this time, it's okay to do this, right? So let's just say that you are. So I'll go ahead now. The spread at that time, you must understand, the spread at that time is going to be close to like 4 or 5 pips. But the reality is that you're pretty deep away from the structure. So you're probably okay with your stop being that deep. But what I would do is the spread being around 4, 5, 6 pips, I would have the spread plus the ATR.
Okay.
Under any circumstances. And when you're entering the trade, it's going to be there for you. So in this case, it would be 4 pips above the structure, which is 17 for 2109, plus the 2.5 pips. So 23, what is that? 5 and 7, 12, 23, 12. Okay. So it's going to look like that's your initial stop. But as the spread thins out to where it should be, you can kind of tighten that up. So just understand, if you're trading during illiquid times, it's going to mess with your, if nothing else, it's going to mess with your entry size because of the spread, right? So, but let's just say that's your stop after all that talk. Right? So we'll just go with that. We just had a big lesson in ATR spreads. That we got a little bit deep there. But in the meantime, you had everything set up at 2-1. So in this case, you've won this trade at a 2-1. Now our kind of manipulated average was 2.3 something. Let me see. I'll look it up. It was 2.37. So you could go to 2.37 based on the data that you have right here and get a little bit more out of your trade. And by the way, what you might want to do with your spreadsheet, obviously we won this trade, right? On your spreadsheet, I'm going to show you a little something here. And this is where you're going to want to learn how to sort, right? Because when you want to use the data to find commonality, this is going to be, I hope I don't lose some people here. But what I'm about to show everybody is the real, this is the real thing. If you want to be a good trader, you actually have to learn to be a little bit of an analyst, not a lot, right? You don't have to be a crazy analyst, like hardcore, but this is how you're squeezing more risk to reward. This is exactly what not Daniel. I was talking about buddy Daniel earlier. Think Free. This is what Think Free asked me to do here. Okay, so we're going to go ahead and use our data mixer screen. Let me share the Excel spreadsheet. Okay, and let me zoom in on it to make it a little bit more visible, just so you all can see it. Insert. Okay, where's our view? Just like V's favorite show, The View. You love that show, don't you, V?
I love that show. I mean, Joy Behar and Whoopi Goldberg. What a tag team!
Oh my God, I'm sure they love tag teams. Let's see here. So what I'm going to do, so as not to change this actual data, is I'm going to copy this screen. I'm going to click in the top left-hand corner to highlight the whole thing. Control-C, copy it. Then go to sheet 2. I'm going to actually rename sheet 1, just so y'all can see me do it, is in data record. Let's call this actual backtest, so as not to confuse ourselves. And on sheet 2, I'm going to open it up, and I'm going to call sheet 2, I always call it data mixer. So that way I'm not changing what's actually going on. I'm going to paste in here, and now I could do whatever I want. So I would I would sort again like we did before.
Mm-hmm.
Hopefully it lets me do it. Yeah, see, there's something going on with
Yeah,
your
there's some weird thing because I kind of just set it up intuitively, and so I'm not sure what
I
I
don't
did.
know why it doesn't let me do it. What I'm going to do is here's what I'm going to do. Let's go to data mixer, delete that, go to backtest. I'm actually just going to highlight the data I want because I think it's the way you've set up your title columns with those drop downs.
Yeah, I
I
think
think
yeah.
that's the problem. So I'm going to go to data mixer. Now I'm just going to paste all this here.
Mm-hmm.
And then that way I don't have those, you know what these all mean. I mean,
Yeah.
you can manually type them. I could actually
Yeah.
see if this actually works real quick. I'm going to copy this and I'm going to go to data mixer and I'm going to insert copied cells. I don't want to do that. I'm just going to insert a cell. All right, let me undo the copy. Sorry, folks. Let me just do like a space bar here. Data mixer. I'm going to insert a cell, just a blank row. Go back here, copy this row. Didn't know you're going to get an Excel
Right.
Tutorial today. And I'm going to paste special. I want the data only. See if this works. Paste special and paste formula. Formulas, nope. Let's see here. Transpose, no borders, no. Paste. I just want the values. Okay. See it. Now it's only the values. You see that across the top. Okay. So now you know what you're looking at, right?
Yeah.
In this case, what I want to do is I want to sort for your best risk to reward. So we go to your risk to reward. We're going to sort for the best, and we're going to find out what is in common with all of those.
Oh.
So I'm going to go A to Z, largest to smallest, expand the selection. Always do this. You want to always expand the selection because you're not just sorting this column, you're sorting the whole sheet. So you want everything that goes with this column to sort as well. So you expand the selection. And now you're going to see, I could get rid of, well, you might want to hold these NAs in there because you're going to know these all failed. So you'll know what in common these all had. And you can see on here, your best risk to reward is towards the top. And you can try to look at all of the data on here and see, maybe your ADX has something in common, right? Some of your fib data, all those things on here, the time of day is going to be key. So if you look at all your failures, there's one thing I can see they have in common right now. A lot of them around market close. 245, 4, I know what time zone you're in. 245, 415, 5. That's all around market close. This midnight is not, but this 115 is, and as long as that's PM. No, it's not. You're in 24-hour format, so it's not.
Yeah.
But a lot of these, okay, so there's a 445 here. Okay, so these are AM. These are not PM.
Oh, yeah, right.
So for some reason, I don't know, maybe there's no correlation with time. But I would, and plus you're not accounting for spread in here. So that's going to be part of the issue. We don't have the spread data, right?
Right.
So that being the case, if you're looking at
that.
You're going to have to estimate that unless there's a way to actually get that data from looking back in time.
Right.
And there may be, I'm not, I believe there is, but I think for this conversation, that's going to get too deep. But I would say that, let's just say you cordon it off. You have to draw a line somewhere. Let's say everything 3 and above on risk to reward, right? So you want to take that out, right? So you can control, let's just do copy. And we'll go to a new sheet, excuse me, and we'll call this data 2. No, yeah, data 2 is good enough. And now we could just copy your selection that you like. And let me manipulate the view, V's favorite show, type in 150. And now you can sort through this data because these are all 3 and above, right? So you can say sort through your time of day and your date and see if there's any commonality between all of these and the time of day. Now, the ADX is actually more the kind of data that you'd be looking for is the ADX.
Wow.
The time of day matters. It does. But I think as you do a little bit more complex algos, you're going to find that you're going to have some more data that you're including, right? Your ADX, your SMI, those kind of things. You'll be able to, to look at ADX and SMI and say, okay, is this, you have these ones that are over, and you do like I do. I think, did I tell you to put ones?
No,
Did I tell you?
no. Yeah, I saw you do that, so I just did it. But yeah,
Yeah, the reason it just makes it easier to sort. It's like a yes or no.
yep.
So I just do a one in there. And again, this is all Excel tricks, but the point is that you can sort for any of these data, any of these items, and you can cordon out that data or cordon off that data to find out how you're getting better data. So again, I don't want to get too far and bore the
Yeah.
audience to tears, but using this data and some very, very simple Excel spreadsheet work, that's going to help you refine your data.
Okay.
And again, you can just find the ones with the best risk to reward, sort those out, see what they have in common, right? So let's get back to the charts. And we've talked about structure, but we could go ahead and have a conversation about candle theory and how that might come into play. So just as a manual example, right? And again, we have about 10 minutes left, so this is that we've timed this really well. Just as a manual example, you see there's a double top right here prior to this trade, and that means that this structure. Oh, sorry, I hadn't hit the button. Thanks for telling me that. So prior to the trade that we looked at, let me grab this, and this right here is a double top. Right, the arrow's pointing to a double top, and there are specific rules, at least the way that I was taught, to identify a double top. Okay, so the way I would do that is, well, I'm not going to get into that, but I think I actually teach it in Algo Factory.
Yeah.
But the fact is that it's right here that I just drew a square, and a double top is really great for reversals. And not only is it great for reversals, but price, if it wants to come back up, is going to have a hard time breaking through that. That's a very, very strong bit of structure there. So if you have your stop loss above a double top, you're in good shape. And in this case, because your stop loss is based on spread and it's based on all these other things, even if the spread tightened up and you tightened up your stop loss afterwards, right, you're still well above where this candle went. So that being the case, this is a great stop based on a double top, based on candle theory. And one thing is that you actually could double dip on this trade because it came back pretty deep here to your double top, and it rejected with some more candle theory that could indicate price will head down again, and you could actually get a second entry. And essentially, this is like a modified. It's almost like an evening star. I'm sure there's a name for this, but let me delete this right here and make this a little more clear to see. These candles right here do show a bearish formation. Now, there may be even a name for this formation. I don't know if there is, but I'm just going to tell you why, knowing candles, that it is bearish. And the reason is that price rallies up. You know that there's structure. We just talked about it. We know it's going to have a hard time getting past that prior structure. So you know that's there based on the double top. Now you have candles rally up, and you get this is a high test doji. So basically it's like an inverted hammer. You could call it that too. And where the candle looks like what I'm about to illustrate here. You have this kind of a small body, right? And then you have a wick that goes up high like this. A strong, very high wick. And what that means is that the bulls tried to press up hard and got rejected, and it came out lower. That even if it was a green candle, it doesn't matter. The fact that the bulls try to rally up and get crushed means it's bearish. And then you have one right next to it right here, which is very similar and even more bearish in that we have your candle get super flat like this. Your doji, this is really more of a doji rather than a hammer. This is a true doji where you have a very small body, and it's a bearish candle, and price try to rally up again and get crushed again. In fact, this is a tweezer top, and on a very low time frame is a double top. So you have a double top, and then you have what's called the tweezer top, basically. So that there's your formation name. And then what seals it in as a bearish move and the ability to add to the trade is that after the tweezer top is over, the next candle has a lower close and a lower low. So to illustrate that, here, the next candle, right, opens here, and it closes like I'll illustrate your close, right? Your close, this is the close of the prior candle, this blue line, and this is the close of the new candle. So it's a lower close, and it's a lower low as well. The wicks, if illustrated, both of these candles here don't have wicks to the downside, or if they do, they're super minimal. So the low is the close. So you have a lower low and a lower close. That means that after this bearish tweezer top, the next candle closed lower, and the low of that candle is also lower. And that's like, okay, that's bearish, end of the trade, based on all of that. Now, the shortcut I talked about to candle theory, what's going to make this bit of the lesson super accessible to everybody who you don't want to sit there and memorize, this is a tweezer top and this is a shooting star and this is a, and I memorized all that crap years ago, but you don't have to, right? So just to illustrate the trade, you would enter at the end of that candle if you want to be conservative, and then you have your stop, and you have another trade that's beautiful. Go short, you win. So what you can do is you can go to your, this is the shortcut. So so pay attention, folks. The indicators tab up here, when you're looking for new indicators, just type in candle theory.
Oh, okay.
And this is, I thought there's candle formations. There's one that actually is trading view. Maybe it's session candles and reversals, all candlestick patterns. Here it is. That's trading view. So I think that's like straight up trading view. There's not like some person did, which is fine. Dude, the scripts being from just a person are great. There's nothing wrong with them. But you see here, like DD, I don't even know what that is, but it's bullish. BE is a, it tells you right here. So DD is a dragonfly doji. And a dragonfly doji, this is a doji version of a hangman. So we're going to get, I'm going to show off a little bit because I know all this crap. But this green candle above the DD is a dragonfly doji. And so that is basically price kind of, depending on the next candle, it could either be bullish or bearish. And the next candle was bearish. So technically that's a bearish scenario. So BE, it's a bullish formation, but if the following candle goes bearish, it means the bullish push failed. Right. So there are nuances to this, but you have a BE, that's a bearish engulfing. That's bearish. Just marks out dojis. So you just have a doji right here, which dojis in this sense are just a market indecision.
Great way to learn.
Yeah, this is a good way, definitely. This is a hammer. Okay, so a hammer, again, it depends on what the next candle does, but a hammer can be bullish or bearish. And in this case, this hammer becomes a hangman because price built a hammer. And if the next candle, even though it is a higher high and a higher close, it ended up rejecting and failing. So this would have been just a failed signal. But when you have a bullish signal fail in a bearish environment, that actually can act like a bearish signal, right? So there's a lot of nuance to candle theory. And I don't really teach it because we teach algorithms. Price action trading is, price action is the foundation of my trading, but that's a whole nother kind of group of classes, extremely accessible online. That kind of stuff, candle theory. This is a great way to learn it. You have bullish engulfing right here, so it's all good stuff.
Before we close, I wanted to ask one more question.
Sure.
What about using fibs to refine the profit stop loss? I guess that would be a whole other exercise.
Well, and we teach that over at the Algo Factory classes, and I actually revamped that video. That video has been redone, I think,
on Algo Factory.
That's right. The Algo Factory, the classes that are on the website, the last month or two, especially the first several, I'm going to go through all of them, but the last month or two, I revamped a lot. Like the entire essentials course is like revamped.
Oh, well, go over them again then.
Yeah, I mean, there's most of the videos I redid them, but you'll see some of them I just kind of edited and, I took out some of the things I didn't think were necessary to shorten them up. But I would, if you are kind of asking about fibs and how to incorporate those, I would definitely I would tell you to consider, in this case, this exact case, I would just do, I would do a fib extension to get my targets.
Yep.
So you have your extensions down here, but go through the class. I don't want to spend too. It's time to end the show.
Yep.
But thank you very much for coming on doing this with us. I hope it was helpful.
Yes.
Any kind of final comments before we let V get us out of here?
No, I'm good. This is very helpful. I like doing this, and I'm hoping to push forward with my testing. I think I'll test. I'm curious to test the JPY US. I know that's a trickier place to trade, but yeah, I'm looking forward just to doing a lot of testing coming up.
Perfect. Well, when you get to that next level, let me know, and we'll do this again, and we'll see if we can continue to refine.
Well, that would be great. Thanks for the offer. Yeah.
Yeah, and that goes for any Algo Factory members. This is open to you. This doesn't cost anything extra.
Yeah.
If you have something going, we'll just do a show like this and see. And I've done this for a lot of guys and gals on here. I've been able to squeeze some more money out. So, V the Gorilla, sir, any last comments? And by the way, thank you for riding along on this one. Do you have anything left before we got to go? V, you're on mute, by the way.
I want to thank all you guys for joining us today. And look, for less than the price of a bottle of water, $1.66 a day, you can be part of the most prolific trading organization in the world. So join us or die.
Hear, hear.
Join us or die.